Today, the Federal Reserve announced that it would be increasing their federal funds rate by another 75 basis points. And you can see here, according to the Wall Street Journal, that the Fed was also signaling additional large increases were likely at upcoming meetings as it combats inflation that remains near a 40-year high. And after they announced this decision to raise the interest rates by 75 basis points, I watched the press briefing that was done by Jerome Powell. And I just wanted to highlight some comments he made about the housing market after he was asked a question by one of the journalists. And he was stating that we probably have to see a housing market correction in order for the housing market to return to a more balanced level where people can afford houses again. And so I just quickly typed up here a quote by him. This is not an exact quote, but it is very close to what he said in the press briefing. So, on the housing market question, this is what Jerome Powell said. He said there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So, the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing fundamentals. That's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think so in the housing market, we probably have to go through a housing correction to get back to that place. So Jerome Powell is kind of setting the stage for the fact that we may see home prices decline and that the Fed doesn't necessarily see that as a bad thing. So maybe don't expect them to step in right away and start lowering interest rates again just because home prices are declining. And so I wanted to show you some numbers here from the California Association of Realtors showing you where we're at on housing affordability. But before we do that, I just wanted to quickly show you, this is from Mortgage News Daily, the 30-year fixed rate mortgage today at 6.36%. And this number being quoted is assuming that the buyer is not paying any points for the loan. So you can see it did come down slightly today from 6.47% yesterday, but you can see that rates really have kind of shot up, over the past few weeks here. So it'll be interesting to see if these come back down. It's possible that some of these lenders were pricing in the potential for a full percentage point increase. And now that we know that it's only the 75 basis points, it could cause rates to come back down just a little bit. And so now, as I mentioned before, we're going to be looking at the housing affordability. And this comes from the California Association of Realtors. My name is Tim Hamilton, by the way, with StellarQuest Real Estate. And I am a real estate broker associate in Southern California. So I look at the California Association of Realtors numbers. And what this number is, and you can see here, for example, in the United States, in the second quarter of 2022, housing affordability was at 38%. And what that means is 38% of households can afford to purchase the median priced home in the United States. So that number isn't bad when you compare it to California as a whole and a lot of the counties within California. But you can see that going back here, before the massive run up in home prices and an increase in interest rates, for many years, the housing affordability index was over 50%. So that means over half the population could afford to purchase the median priced single family home. And going back all the way here, you can see it reached a high at 71% in 2012, which is about when home values reached their bottom and started increasing again. But then going back here to 2006, it reached its lowest level at 10%, which is a very low level. If you consider only 10% of households can afford to purchase the median priced home, that's not good. And so that's when home prices peaked. And we saw the Great Recession and home prices crash quite a bit. So now looking at California, we're currently at 16% today. And going back, you can see that it reached its peak at 56% in 2012, and it reached its low at 11% in 2007. So you can see that today we're getting very close to the lows we saw right before the last housing market crash in terms of how many people can afford to purchase a home. And the interesting thing is, a lot of these counties in California, you can see this red highlighting indicates that it's an all-time low. So you can see that there's actually a lot of counties within California that are currently at all-time lows in terms of affordability. And many of these counties, if they're not at all-time lows, they're starting to get pretty close. And so I just wanted to, since I'm in Southern California, highlight a few of the Southern California counties. In Orange County, the housing affordability number is currently at 12%, and its lowest level was at 10%. In LA County, we're at 16% currently, and the lowest it ever reached was 9%. San Diego County, we're currently at 14%, and the low we reached was at 8%. In Riverside, we're at 21%, and its low was 14%. And then in San Bernardino County, we're currently at 30%, and the lowest we ever reached was 19%. And so this is part of what Jerome Powell is talking about. Basically, in order for more people to be able to afford to purchase a home, we may need to see home prices come down. Because when it comes to housing affordability, three things can happen to improve affordability. You can have home prices decline, you can have interest rates drop, or you can have household incomes increase. And since household incomes typically don't increase at a very fast rate, it's typically pretty sustainable over time. And since the Federal Reserve is signaling that their intention is to keep raising interest rates, really you're only left with one option if home ownership affordability is going to increase, and that's home prices dropping. So unless we see the Federal Reserve pivot and start lowering interest rates, or maybe start buying mortgage-backed securities again to, try and lower the 30-year fixed rate mortgage, then really the only way housing affordability can increase again is for home prices to drop, which is why, Jerome Powell is saying that we may need to, or probably will see, a housing correction in order to get back to a more normal level in the housing market. So let me know what you think in the comments below. Where are home prices headed? Do you think they are going to keep declining, or do you think they're going to start holding steady where they're currently sitting today? When the new housing affordability numbers come out for the third quarter, I'll make a new video showing, giving you the updated numbers. So make sure you subscribe if you like to stay up to date on the housing market. And if you have any questions, or you're thinking about buying or selling a home in Southern California, feel free to give me a call or send me a text anytime. My personal cell phone number is 714-486-4086. I'll leave that in the description below, and I'm happy to help you out in any way that I can. So feel free to call anytime.